Hello traders, welcome back to my channel. This is Ali Abbas at the stock Monger. Today we had an amazing day on a downtrend which was spotted very easily, and I'll show you how. This is Bank Nifty on the 5-minute chart. So first, I'll talk about yesterday. Is when it went up, it came down and then it stayed within a range over here. Now, how to spot where to short and or where to buy a put? Very simple. When in the first 15 minutes, if it forms a candle over here, not able to break the previous day's low, this I'm talking about the 12th of July. That was yesterday, Tuesday. So it came down and then it tried to break up again, and when it created an engulfing red candle, as you can see over here, okay, that is where you would either sell a call option in the money or out of the money or at the money. It's up to you as per your risk appetite. And this gave a very handsome decay over here, and this would be your exit once it breaks this low. Now if it breaks this low, if you want to hold on to it, well and good, but you can start shifting your stop loss a little by little, and then when it comes back, it triggers the stop loss and you leave in a profit. Now another time when I tried to break over here, it created a evening star, and that is again where you would short a call, and this also gave a very handsome profit. So these were the trades that I had taken yesterday. Today also, when it created a candle, a bullish sign candle, but then the price action showed that it is not breaking the day's high, and it started breaking down below this level. That is, being a Wednesday, if you had shorted a call over here, you would have got a very good profit. You do not even need to shift the stop loss. It would come all the way down here and a good decay on the call short. If you had taken a put, yes, you would have taken a put either in the money over here or deep in the money over here. Deep in the money, the advantage would be that even if there is a little pullback, the decay would be very less. But if you take it over here, the decay can be fluctuating big. So these were the trades on Bank Nifty. On Nifty, what we did today was I waited for the consolidation over here, and since it did not break the previous day's low over here at closing and also stayed in the same level, what I did is I gave in the community group to short 16,000 put option, and over here it gave a good profit of about 14 points, a very quick profit over here at 14 points. So when the retracement came back down, it was I didn't see the reason to hold it, so I booked it somewhere around this level, and the profit was for 14 points. On the downside, if you see, the put options really expanded well. If you had taken 15,900, or let's say even in a deep in the money 16,200 put option, it went a great deal, and this would have given you a very handsome profit, probably almost double your money in a very short span of time. So the whole day, if you held the put, yes, very difficult, I know, but no major retracements. Even once it broke this level, no major retracements. The trend was just downward. We look at the put option. As you can see, the put option that I had given to short when it was straddling this area at 50 mark, and then this is where I shorted it at 53, and it came down over here and tried to retest both sides. Now I wasn't very sure, so I had given the exit to be done at around this level. It was 39.40, which is a good 14 points. And then after that, it started to move in one direction. See this. If you're taking the put from 40, it had gone to 100, so that's to almost 1.5 times the return, so 150%, which is pretty good. So you have to be very careful when you are shorting options, and you should always draw your levels and the mark that you'd like to exit at. As you can see on the 16,200 put option, which was in the money, it opened at around 100 and it went up and then retraced back, and then a big green candle, sort of taking a little support or breakout over the day's high. So if this was your buy region around 125, you would have seen it double by the end of the day over here at 250. So anything that floats like this and just starts breaking out, you can start shifting your stop loss. First, once this breaks out, you will shift your stop loss here, and then once this breaks out, you start putting your stop loss here when the other candle is a little higher. So if you had held it till close, yes, you would have got a good profit, but probably if after this closing there was another hammer candle over here and a retracement would have seen you exit around 210, 215 over here. 90 points, 95 points profit is very good. So this is how you would trade deep in the money options if you are looking for a directional move. And even if there was a small retrace over here, you can see it's just a matter of something within 50 points. It didn't touch 250, it didn't touch 200. So then it's just broke out on the last candle over here and touched 250, which would have doubled your money. Tomorrow, what I'm seeing, given the CPI inflation data, let me just put this on a 15-minute time frame. Okay, now this gap is covered. If you see the gap over here, it is covered. The immediate support level will be at 15,914. Watch out for that. The first resistance will be over here at this level where the breakdown happened at 16,060. The next resistance will be at 16,135. So if 15,914 breaks, then we are seeing a steady and sure shortfall to 16,880 levels. So be wary of this. I think the US CPI inflation data is beyond what was forecasted. So we might see a gap down opening, but if there is a resistance in this area between 15,950 and 16,000, then we would see a whole day ranging and probably a directional move after 12:30, 1 o'clock. So watch out for that. Watch out for any short covering or more shorts on the upper side, or watch out for anything that will sell on a rise. So tomorrow is going to be a very big zigzag day, a lot of fluctuation, a lot of volatility. So please be careful. All the best. Have a great Thursday expiry. I'll see you tomorrow.